Global markets appear to be taking a breather after a good run, and that's despite the widely anticipated US tax cut plans being pushed through by the House of Representatives late yesterday. European markets are in the red, partly due to a stronger euro, but equities in South Africa are bucking the trend, trading in positive territory with mining counters lending support to the all-share index. The local currency is also firmer relative to the New York close, and Moody's has given the thumbs up to the new ANC leadership. Let's have a look at your indicators. Our markets anchor, Nompumelelo Siziba, joins me in studio. Thanks so much for your time, Nompumelelo, sitting on the other side from where you normally are.
For a change, yes.
Let's talk about what's happening in the US. The House of Representatives pushing through this $1.4 trillion worth of tax cuts legislation, but the US and Asian markets are down. What's happening there?
Okay. So it is good news that this US tax cut plan has been pushed through. There's a technicality. The House of Representatives needs to vote on it again due to the rules mix-up that you mentioned, and then it should be on Donald Trump's desk, ready for him to sign into legislation. But the negative thing, which shook markets a little bit, is that they're now beginning to wonder, well, what are the implications of this tax cut going through? Of course, it's going to be very expansive for the US economy. That is, it's going to expand the US economy. There's going to be more money in the system. Corporates are going to be making more profits because they're going to be paying less taxes, and there should be a bit more money left in individuals' pockets as well. So people will be going out to spend. But then the negative there obviously is inflation. Inflation is going to come thick and fast. So then the question is now being asked, what does that mean for monetary policy? Is that going to be, is that going to be coming fairly strong next year? We believe that the chap who's taking over from Janet Yellen is the same as her. That is, he's fairly dovish. But if the circumstances prevail that he has to push up interest rates, it might be negative for the rest of us emerging markets, because we'll also then be forced maybe to also raise rates.
We're bucking the trend. The side all-share index ended up, trading in positive territory. What are your observations there?
Well, I think the reason why we're bucking the trend is that I think we still have that euphoria, that optimism in the South African economy around Cyril Ramaphosa winning. But the mining counters, as you did mention, have helped that. And I guess that's partly because of a slightly lower US dollar. So when the US dollar is low, it means commodities which are denominated in US dollars are cheaper to buy. And so people demand them more. And that's good for South Africa because we're a commodity producing and exporting nation. So we've seen the mining counters do quite nicely and push up the bourse as a result. However, of course, tomorrow could be completely different.
Why are we seeing the rand firming besides the region that you mentioned against other stronger currencies?
Okay, so now the rand has been sort of range bound, or was range bound yesterday between 1270 and 1280. But now we've seen it pick up a little bit, trading around 1266 or so that it is firmer. I think part of that is obviously because the US dollar is slightly weaker, but I think that there are still those peculiar things that are happening in South Africa, the fact that we've got new leadership and so on, but there are still lots of questions, of course, because of the composition of the ANC top six. People still unsure, but at the moment, things seem to be positive.
Speaking of ratings agencies, Moody's come out, seems to be giving the thumbs up to Cyril Ramaphosa as ANC president. That's quite a relief. And Fitch also coming out and saying that even though this has happened, there's still going to be political uncertainty in South Africa. Yes,
I think Moody's is always fairly optimistic relative to the other agencies. But Fitch has come out and said given the composition of the top 6 of the ANC, it's going to mean possibly policy paralysis. They believe that it's going to be very difficult for Cyril Ramaphosa to come up with any new economic ideas in terms of policy, and even implementing the current ones that exist is going to be difficult, because obviously there has to be a meeting of minds. There needs to be a consensus among everyone in order for them to push things through. For them, political uncertainty is a no-no, it's negative, and so come the next ratings decision, it could be negative from them. From Moody's, they're always quite pragmatic, but you never know.
We'll wait and see. Nompumelelo, thanks so much for your time. Markets anchor Nompumelelo Siziba. More business news with me after the break. Do stay with us.